Hello everyone and welcome to my morning report chart analysis videos on Monday the 4th of June with me, Richard Perry, market analyst at Hantec Markets. We've got a pretty decent start to risk appetite this morning as there has been a rebound in the market sentiment generally. That's come as as a response really to non-farm payrolls on Friday. We had a strong close on Wall Street on Friday. That sort of helped to just generate some momentum to the sentiment improvement that we've seen as the political situation in Italy has just started to sort of subside in terms of tensions, and it seems as though that the contagion could well be contained. And certainly the sentiment across equity markets is positive. In Europe, after we had a strong close on the S&P of 100 over 1% higher on a Friday, and you can see across forex markets as well that there is a generally risk positive move. The euro continues to rebound. We've seen, the dollar is generally across the board a weaker currency, but the commodity currencies are all stronger. The Aussie, the Kiwi, and also the Canadian dollar are all sort of benefiting this morning from this improvement in risk sentiment. And this comes as Treasury yields have picked up quite strongly in the last couple of sessions, and that has sort of helped to sort of play into this whole improvement in risk appetite. You've also seen volatility falling back again, following on from the spike high that we saw at the beginning of last week. And that's sort of generally across the board just pulled back the dollar a touch, but not too much. And it's interesting to see, or it will be interesting to see, that as Treasury yields start to rise again, and you start to see, sorry, not that chart. You start to see the yield spreads start to widen again with the Treasury yields going higher, and you can see here the bund yield under Treasury yield is just dropping back again. As it will, that start to pull for dollar strength renewing once again, because you can see certainly on the dollar yen where the yield spread has increased once more for the 10-year spread over JGBs ticking higher. You've seen the dollar yen ticking higher, so that sort of helps to suggest that possibly the dollar could well be close to sort of renewing that correlation with yield spreads once again, and whether the weakness on the dollar continues is sort of possibly sort of uncertain at this stage. Now, what we have got is not a great deal of data actually today. It's Monday, and you haven't got a hugely dense calendar to really play. You've got the UK manufacturing, you've got the construction PMI, which has just come out and slightly ahead of expectations, so that should help to sort of bolster sterling to an extent, although construction PMI construction is only around about 7% or so of the economy, so nothing too significant there. Factory orders for the States is the main data this afternoon at 3 o'clock, expected to drop 0.5% on the month, but that was after a pretty decent month last month. But factory orders tend to be pretty erratic, so it'll be interesting to see if that has a play on the dollar. So that takes me to my chart today, which is Aussie yen. Now, I talked about improving risk sentiment, and you can certainly say that that is playing out through Aussie yen. We saw a pickup on middle of last week, and that continued with Aussie yen strongly higher on Friday on the payrolls report that was pretty strong out of the States. That helped to sort of improve risk appetite again. Above 82.60, which has been a bit of a pivot on Aussie yen within this sort of range play that we've played out for the last 3 months or so, and that breaking higher again above 83.15, which is a basis of resistance. That now tends to suggest that we're going to come back towards the range high 84.50, and sort of improves the prospect even further of a recovery that could break out and form a base pattern, because you've got these momentum indicators which are ticking higher again. Look at the MACD lines crossing, looking to sort of pick up from the neutral point. The RSI ticking nicely, strongly higher above 50. The stochastics also suggesting an acceleration. So it's a pretty decent recovery, and it looks like momentum is there for a test of 84.50 that we could see, which is the key resistance of March and May, and also where that 144-day moving average comes in. So you'd be looking at sort of buying into weakness. This is the hourly chart where you can see the sort of basis of old resistance around that 83, 83.10 to 83.20 area. Bring breakout above that, so that becomes a basis of support. You got basically between 82.70 and 83.20 is a pretty decent sort of basis of support now to use for any weakness that you see, or any unwinding move, and you can draw in an uptrend there as well. Get that uptrend going. You can draw an uptrend which again comes in around 82.90 at the moment. So anything that unwinds the hourly RSI towards sort of 40 to 50 area, I think is pretty decent. Anything that brings the MACD lines back towards neutral seems to be an area where on the hourly chart the buyers tend to come in. So there is a more of an improving outlook here on the on Aussie yen, and it looks like it is going to be continuing to buy into weakness on a near-term basis. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.